right. Welcome back. Welcome back to another episode of Take Profit Tuesdays. And as always, if you're watching in from the Instagram stream, you could jump into the YouTube stream if you want to watch the charts. If you're on the YouTube stream, make sure you like the video, comment, subscribe, and yeah, let's jump into it. So this week we kind of have I would say a little side off, slanted, somewhat sell off week. Um, the market was definitely overbought, which I did predict. There's gonna be a little pullback. I did predict it might come back around this range. We did talk about possibly jumping in. I'm gonna take this off because that pattern didn't fully complete. Yep, actually I'm gonna leave it there. I'm still gonna aim for this part. But before we even aim for that part, we definitely want to see it hit come around this range, this retest zone. I do have my money loaded up. If you guys want to jump into when I jump in, if it does touch around this zone, I'm just gonna take some money out and just buy S&P. I don't know how much I'm gonna buy, but I'm just gonna buy it. And yeah, I'll disclose it next week when I do buy it. I'll let you guys know how much. I'll let you know how much I'm gonna aim as far as take profit goes. Yeah, I'm not sure how much, but we're just gonna play around, guys. We're gonna practice together. So if you want to be a part of these trades, I would watch the video and just be a part of it all, so you guys can all see how we can all make money together, because it's that easy, right? So one thing I do want to emphasize is that even though when it does come into this part, be very mindful that it won't possibly go all the way up, but it's a good buy zone, because again, it's a very cheap position. What's up, Abby? I hope all is well with you too. I hear good things. But yeah, like I said, guys, it's gonna be in a cheaper position. Once it's in that cheaper position, obviously you get at a better price. So if you get a better price and it continues to go up, that means you're in better profit. You would not want to buy it essentially at its most high, because again, you'll lose money in that, right? So I do want to go over one trade. While I guys have you here, we are going to talk about some fundamentals and a little bit more news wise, and maybe some crypto. But I do want to go over one trade we we didn't succeed. I think we did talk about it last week as well. It is going to be the Audi CAD. So this trade did not succeed, and that's fine. Because again, guys, we always talk about the 4 pillars of what we do here at Vani, which is 1, capital, 2, strategy, 3, risk management, and the 4th is the psychology. And again, we're gonna have our masterclass May. Let me pull it up. But in the meantime, I just want you guys to keep in mind that if you guys want to ever be a part of this group to where you could actually trade confidently, with a lot of confidence, not have to always guess yourself, or always have to have people come in and out the group. The best way to what's good, Will? The best way to learn all this is to be a part of the masterclass. And let me pull it up for you right now. And again, if y'all watching this on the Instagram stream, just go to YouTube if you want to see the charts. Let me pull it up for you guys right now. And again, guys, this is all going to be an online webinar. And if you have any questions, comments, concerns, definitely access. So as you can see, it's the Vani FX Masterclass 1 hour class. That will last for all ages, because definitely it's a skill that you don't have to go out and train. It's a mental skill. It's like going to school. But this schooling will actually make you more money. So then we're gonna teach you about crypto, forex, stocks, and much more. The date is already decided. Obviously, it's gonna be May 13th. And this is gonna be the QR code if you want to send in Bitcoin via Bitcoin. So it's gonna be $14 US, and save $5 off if you send Bitcoin, which is not that bad. But yeah, like I always say, guys, if it's a 1 hour class, and because it's a 1 hour class, it's only worth like $40. I know people in the industry are costing way much more, so this is gonna be the first one. Let's see how it goes, and let's keep it going. All right, so back to the trade that we took. So I do want to emphasize, even though this trade was a loss, it was a 1% loss on my account size. And again, we do teach you how to set those 1% risk trades. So depending how relative, depending on how much lot you put or units you put into this one trade, it could either be 10% loss or 100% loss. But for me, I've been in this game for as long as I have, and I almost do 1% on all my trades. So this is not a big dent to me. My psychology is there. I'm very confident on my trades. And if it doesn't hit, it doesn't hit, and it is what it is. I'm just prepared for the next trading day or the next trading session, or should I say the next trading opportunity, right? So which is kind of something I always do. And I'll give you guys a little tip, while you're still here. So this is what I kind of do whenever I have a bad trade. I lock it in. I see where it kind of hit it. I adjust it. Let me adjust it back again. I adjust it to where it kind of hit. And I say to myself, okay, so right now, even though I thought it was in a selling momentum or it kind of double topped and I thought it was going to keep going down or continue to go down, it didn't. And that's okay. That's definitely okay. That means it's just, it's not going in that momentum, which could also mean it could possibly still keep going up, which is perfectly fine. And that's the great thing about it too. When you trade such as this and you do 1% risk management, each trade that you take, it's very like, okay, cool, I lost, cool, I'm back in, I'm still in that, I still have my capital, you still have your pillar number one, and that's very important. All right, so that's the AUD CAD. I do want to go over dollar real quick as far as the fundamental we're gonna go over in this video. As you can see, the dollar's kind of what's the word I'm looking for? Accumulating. The dollar's accumulating in this little area right here. So in my opinion, guys, like I said, as far as we've been talking about these past 2-3 weeks, almost a month now, almost 2 months now, the feds are trying to bring up the price. They're trying to bring up the price of the dollar itself. So, and that's just to decrease the inflation, making things more cheaper for everyone else, which is not a bad thing, because due to the corona, everyone was putting so much money, or the government was putting so much money into the market. But yeah, as you can see right now, it's still in the accumulation phase. It's just about to break that 99 mark, about to touch 100, and yeah, I don't know when it's gonna do it or if it will, but if it does, hey, that could be a good sign for at least us in the U.S. For other countries, not so much. So let's see. As far as the Euro USD, as we talked about, I think weeks ago or 2 weeks ago, we got into that trade that went to profit. As far as me now, being that the dollar will most likely break that resistance zone, I am expecting a break right here on that line, and if it does, we're gonna obviously keep shorting. But now the next problem lies is where is the buy zone, or where it might pull back. Will it continue to go down? We don't know. We obviously do not know, but nonetheless, we have to not ignore these psychological support zones. Not to say that the dollar won't go back down here. It might. There's definitely a chance, but honestly, guys, we gotta play it day by day, week by week kind of thing, and it can't be rushed or forced. So just like all my positions that I do, all the trades that I do, I'm just gonna sit and wait. And if you're a smart trader, if you know what you're doing, you're gonna sit and wait for the best position, so you could get into the right position to make more money. You don't want to take a position where you're always gonna be losing. No, that's, as you can see right here, I've done 2 trades with the Euro USD, and you saw one with the AUD CAD. 2 out of 1. Took 3 trades, won 2, lost 1, right? And that's fine. That's a profitable week, month, or how have you. Everyone's a different trade, like I always say. All right, so let's go on some fundamental news as far as where position traders are at, or retail traders. As of right now, we could see that as far as the non-commercial, which is the retail traders, a lot of them are going long, and the reason why is because, and this was the other day actually. This was definitely the other day, and So today's the 5th. This was on the 29th, was the end of the March. So this is pretty relevant and recent. So this could be very helpful for you guys. So again, if you're on the Instagram watching this, hop onto YouTube if you want to see the charts. I already tagged in the comments. All right. So as you can see, um, the retail traders, a lot of them are in the long position because the USD is at support, which is to be expected. But nonetheless, the short positions are just behind it. So like I said, guys, just be very careful when you get into these positions. That's why will do what I do, and just wait. Give it some time to play out. Let's see if it might go up. It might go up. It might not. You just have to wait and see. But once it does those breaks and continue the momentum now, that's when you're gonna wait even a little bit longer just to get into that retest buy zone or retest sell zone. So now this is a little bit more important. The commercial. So when you're talking about commercial now, these are going to be the institutional traders, the big hedge funds, so on and so forth. So as you can see, there's a good portion, them going along, right, expecting the euro to go up. And then you got the inversely where it's even astonishingly more, people who are, oh, what's up, Baron, um, are even shorting it. So again, guys, overall consensus, even though retail trades are in a more favored to the longer position, there are generally more shorter positions for the institution wise. And again, as we always talked about, institutional have more buying power and position, right? So guys, I want you to keep in mind. So if you're investing trading into the Euro USD, just be mindful. We might see a big sell off soon, and that's just is how it is in the markets. So like we always say, the DXY is about 50% of Euro USD influence. So as we always say, they kind of move almost one for one inversely. So let's keep in mind of that. All right, just to I guess to wrap things up with this video, we're already 12, almost 13 minutes in, or stream I should say. I just want to end it off into this paragraph. So we're just gonna read about three or four paragraphs of this, and this one is titled "A Official Speech Tanked the Markets, Why It's Worrying Everyone." And just like how we started this morning, how we started the stream, the market did not really tank. In my opinion, it didn't really tank. Yes, it did have a rally, and it didn't continue to rally. There's something you can't expect it to always go up. What must goes up must come down. So again, you have to give it time to go up, and then it slows down. Then it's probably going to pick back up again. Like we always say, the market always moves in waves. So just to bring up the article written by Alexandra Sags. That's a funny last name. It says tech stocks and bond markets both sold off on Tuesday, which we kind of saw a little bit of sell off overall. Blamed comments from Federal Reserve Governor Brainard. I don't know who that is. In Tuesday's speech, Brainard said it is a paramount importance to get inflation down, of course, and highlighted the urgency of tightening policy quickly, of course. She also said that the central banks will start to reduce the size of its balance sheet at a rapid pace as soon as its May meeting, which is next month, guys. So 3 weeks, guys. They got about 3 or 4 weeks just to reduce those rates and reduce their balance sheets from those bonds they've been selling out. U.S. central bankers currently don't plan to sell bonds from the Fed's $8 trillion portfolio. They assured investors will allow bonds to mature without reinvesting the principal, much like they did in 2007. But on Tuesday, Brainard said she expects its bond holdings to shrink considerably more rapidly in the previous recovery. And that is because, like we said before, the inflation is increasingly high back than it was in 2018. Yo, what's good, Brandon? How's it going? We can expect them, as we talked about other videos, that the Fed needs to decrease inflation, and the best way to do that is by making things more expensive for them to borrow money. And how do people borrow money? They go to the government, they take out a loan, or they don't go to the government, they go to a bank. They go to a bank, take out a loan. The bank gets the money from where? The bank generally goes from, their savings balance sheets, or they even go to the Fed reserves. So a lot of times when banks take money from the Feds just to make out loans, the bank, obviously the government charges them a rate, but the rate is going to be considerably below what you're going to be charged, which because the customer is the bottom line. So when the customer is charged the bottom line now, if the increased rates affects the banks, it's also going to affect the bottom line, which is you, the consumer. So let's say for right now, as rates are increasing for the banks, it's also increased for you, which are going to make it more difficult for you, or should I say, more expensive for you to borrow that funds, right? So let's say you want to take $100,000 loan. When COVID started, when people were moving back and forth, let's say the rate was like 5%, right? Things are cheap, people are buying, people are moving, money's moving in and out, right? Money's fluctuating in the market. So the best way to, so when money is fluctuating in the market as fast as it was back, 2 3 years ago, whatever, um, that causes inflation to go up. So the best way to reduce that is how the government does that is by increasing the cost of goods and services, such as lending money. And when you're lending money, you're putting money into the market or supply. So the best way to do that to reduce is charging more people to lend the money, which is the bottom line. So I actually ended that's saying the long dated treasury yield sharply higher and prices lower. The 10-year yield jumped from 14.5 basis points or hundreds of percent points to the 2.554% interest on Tuesday. The 30-year talking gibberish, guys. The 30-year yield rose 10.9 basis points to 2.58. So just think about that, guys. They're even increasing the yields just to borrow money for a certain amount of years and so on and so forth. And this is gonna keep happening until I believe June, probably longer, depending on how interest rates are gonna go up. So yeah, I'm just gonna end the video there, guys. So as always, as we talked about, make sure you like the video or like the stream, comment, subscribe, and if you guys learned something today, support your boy. Alright, and like I said in the beginning of this video, I'm most likely, if you ever see this price go down right here around the 44, around this range we marked right here, most likely I'm gonna buy, and then next video you're gonna see me get a price tag, and then I'm gonna disclose how much I'm putting into that position. And then yeah, if you guys want to be a part of it, jump in. If not, cool, you missed out. If you're in, we made money. You know what I'm saying? But anyways, I'll see you guys next video. Peace.